Gold and silver are simple for me to understand, right? They're physical, they're in my possession, and they have the most functionality of any asset because they're used across every single area of the global economy.
As we enter a post-pandemic world, many investors are looking for ways to prepare for future uncertainties. A solution for some may be to invest in precious metals such as gold and silver. It's always a good idea to create a diversified portfolio. This includes stocks, bonds, real estate, and precious metals. The best time to invest in gold, silver, platinum, or palladium is when the stock market is strong and precious metal prices are at their lowest, so investors can reap the rewards of a recession. In today's video, we'll share why Lynette Zang believes it's the high time to be prepared with gold and silver. But before we get into the video, make sure you subscribe to our channel and press that bell icon to never miss an update. As interest rates rise, all the debts that couldn't pay before, but the banks didn't want to show the losses on their books, so they kept lending them money that has to be stopped. And it is that the Fed needs to raise rates for its credibility. They have to do it. But we will see a very quick turnaround when everything starts to implode, because there's only one way to fight deflation, a falling market, and that is with inflation. And there's only one way to fight inflation, and that's with deflation. We've been studying this for many years that we're at the end of this currency's life cycle. With inflation heating up, what this really shows is the destruction of the last remnant of any value on that currency. And the only tool central bankers really have, they always talk about their tools, but they're never specific. All the tools that they really have are interest rates, but the interest rates have been anchored at zero since 2008. Gold and silver are the most functional assets as they're used in all areas of the global economy. So 100% of the time, there's demand, and there's demand in many areas. So maybe it's going up, maybe it's going down, but never endeavor in 6,000 years that has gone to zero. The rapid expansion of renewable energy as governments around the world increasingly commit to reducing carbon emissions is expected to push demand for silver from solar PV panels to an all-time high. Physical demand is expected to increase this year, which could support spot prices. The Silver Institute forecasts that global demand could rise 8% from 2021 to a record 1,112 million ounces in 2022. Historically, gold and silver have made strong gains when U.S. inflation rises, in part because rising costs of goods and services often coincide with a weaker U.S. dollar. Both metals are valued in U.S. dollars, so when the dollar drops, gold and silver generally rise as they become cheaper to buy using other currencies. Given increased industrial demand, silver tends to rise more than gold with rising inflation and a falling dollar. Silver can be considered a good portfolio diversification tool with a moderately low positive correlation with stocks, bonds, and commodities. However, gold is considered a more powerful diversifier. It's always been uncorrelated with stocks and has had very low correlations with other major asset classes, and for good reason. Unlike silver and industrial-based metals, gold is less affected by economic downturns because its industrial uses are quite limited. To varying degrees, both metals can provide a hedge against potential economic or market downturns, as well as prolonged periods of rising inflation. Understanding the difference between how the two metals are used, their economic sensitivities, and their technical characteristics can help you determine which metal may benefit your portfolio. That's all for today. Let us know your views in the comments section below. And don't forget to like this video before leaving. Thanks for watching.